Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each show, we explore all things from the world of trading and answer your burning questions. So we're back.
We are made, and with a vengeance. We are material again this week. Oh, it's a constant flow of material that comes our way. We're quite lucky from traders out there. So.
Yeah, this is we'll be looking forward to discussing this one. So this one, with the main crux of it is about a trader who couldn't overcome his losses for over 2 years. So over to you, mate.
Yeah, I met this trader last week, and at a trading show, he's been an analyst at a small boutique hedge fund. He's not anymore. He's just full-time trading. But he had gone, his story was fascinating. He's in his 30s, and if he's watching this, I'm sure he won't mind me discussing this. He was successful for 8 years. So he had really built his, his approach to trading, and that's fine. He's got his way of trading. And 8 years of profits. And over that 8 years, he'd built a very small account up to about $100,000 or 100,000 euros, whatever it was. And then about 2 years ago, what happened is his account was trotting along, and then gradually the equity was growing faster and faster. So then his position size was growing faster and faster along with the account. And then for whatever happened on this one day, made a mistake or two. He's an intraday trader, and he lost about 80,000. Don't quote me on that because I might have got that wrong. But it was something. It was a hugely significant amount of his total capital in like a single day or two of trading. And the after effects, that was 2 years ago. And the problem is that singular event, and then after that, he couldn't trade. He was trading really badly. It really impacted him. And he's still here now with the after effects of that event that happened. And so he's making some money, but he's not trading well. Mm-hmm. And so he was asking for advice on that. So we're having a bit of a chat about that. But that's the backstory anyway. But I think we were talking about this over coffee earlier on, is what's fascinating is it, as you said, it's a trauma that he's gone through.
Mm-hmm. Yeah. I think the thing to bear in mind there is that he's in a position where he's done very well. So he's worked hard at learning how to trade. As you said, very analytical, very professional in his approach, and he's been rewarded for that. And I expect, I don't know, because I don't know the guy, I expect even though he was doing very well, he was still very measured in his approach, and he wasn't doing anything stupid or crazy. But the challenge is that even though you may be approaching things systematically and logically, it's very hard in that situation for you to not feel some sort of confidence, maybe even moving into overconfidence. And it's the difference between logically knowing something and doing something versus how you emotionally feel, regardless of whether that is because you're not doing very well and you're losing money, or when you're doing well. And I think it was fascinating what you then went on to talk to him about, because it leads into this idea of there's stuff going on emotionally, literally in your body, that you may not be aware of.
Well, I mean, it even drove him over that 2 years. So he trades from home. His partner, she works, and his job, so to speak, is trading. So they've got enough income coming in, pay the bills and live and all of that. She's got a good job. And he said over this last 2 years, he would find himself, up until relatively recently, getting up 6 o'clock in the morning, doing all his analysis. He makes copious notes. He was showing me all his notes that he makes on his phone and whatnot. And then he wouldn't be able to hit the trigger the entire day. Wouldn't be able to place a single trade through fear. So this fear was, gripped him, and it's lasted 2 years. So what I said to him was, okay, right, obviously, yes, okay, he's a fear-based trader now. He's become a fear-based trader on the back of this traumatic event. But he has read all the books. He's read all the psychology books. So he knows all of that. How can you fix me? Can you help fix me? If you can give me anything different to what I haven't already read about. So I said, well, have you read the book, The Hour Between Dog and Wolf? And he went, no. And he's French. No. And he said, no. And I said, well, in The Hour Between Dog and Wolf, they studied bank traders, and some of these bank traders who traded through bear markets, significant bear turns, bear runs where what they were trading obviously fell a lot. They measured their testosterone levels, and their testosterone levels would fall in line with their trading, and if they're losing, because that's a natural fight or flight response in the body. You either elevate your testosterone levels in order to fight, or you depress them in order to run away. So in the market, if you lose a lot of money, it's likely, at least on a temporary basis, your testosterone levels are going to drop. Yeah. What's happened to him is they've stayed depressed. And so I said, in these studies, they found that some of these bank traders, their testosterone levels would remain low for years. And I kid you not, his face, when I told him this, just literally went ashen. And he said, oh my God, he said, that explains so much. He said, and if he's watching this, I'm sure he won't mind. He said, my sex drive had dropped. And again, another sign of all of this, through all of this. So he's probably already read it by now.
He's that sort of guy, I think.
Yeah. But I said, well, that's something you can look at. So you can have TRT therapy, testosterone replacement therapy, or do it herbally. Weight training helps.
Cool.
So resistance training, and obviously diet as well. Increasing your protein intake along with weight training, resistance training will certainly help with that. And as he naturally increases his testosterone levels one way or another, then that may well fix a lot of the problems. Because as you said, logically, he knows it all. He knows everything he's doing, but he's banking his profits too soon. He's coming out of trades. Even as of last week, he said, I'm coming out of trades way, way too early. So,
well, I think that's going to even compound the problem. The fact that he knows, I think the saying ignorance is bliss. I'm not suggesting people shouldn't study psychology, but sometimes short term, it can almost be worse to the trader when they have done all the reading and the referencing and the understanding, and yet they're still coming out of trades too early. It's almost as if that would hinder his testosterone levels even more, because he's not coming out the other side. He's actually doing all the things he knows he shouldn't. So he's probably, yes, there's things like self-talk and there's other things we've talked about. But what I really like about this is it's an external mechanism. It's not necessarily directly looking at something he needs to do within his trading, because he's already experienced that level of competence. He knows what to do. Like you said, he's read all the psychology books, but actually it's one of these examples where something a little bit left field could actually be the thing that helps bring him out the other side, and actually working more on himself and working on his biochemistry to bring that confidence level up. Because it's not the first time a trader's been in that situation, but I think what's so interesting about this is that it's the response to the fact that he'd done very well.
Yeah.
And I think it could be almost a bigger fall for him, because he's not in that boat, well, yeah, I've been trying 6 months, not made any money, and then just lost a load of money. He'd had a high level of competence, and then suddenly it shifted.
And the irony is that he can see, he's got all his data. So he's going back on all of these trades over the last year or 2 years, and he can see how much money he should be making, or return that he should be making. It's not like he's out in the wilderness, as you said, and he doesn't know what he's doing. And so even worse, as you just said, logically, you can see all of this trades that he's done, and he's bailed and he's come out early, or he's got too nervous and not taken the trade. So it's completely obviously psychological, and biochemistry is playing its part there as well. Interestingly, I was talking just the other day to someone else about this very thing. And when you look at professional sports people, then we see the same thing when they lose their mind. They're highly competent sports people, and yet it still happens to them as well. And you take golfers, professional golfers who get the yips. Now, there's a great story of one of the early British golfers who won one of the first British golfer to win the Masters over in the US, and among others. And quite far into his career, having already won the Masters and the UK Championships, and I'm useless at St Andrews.
Yeah. And all at St Andrews.
Yeah. And he so he got the yips after all of this success. And he said in an interview that he would get onto the green and the colour of the green would go yellow. And as he's looking at the hole over there as he's lining up for his putt, the hole would disappear. literally it would just shrink so much. And that was his experience of the yips, where he could no longer even see the hole in order to putt it. So again, don't underestimate the power of the mind when it comes to your trading and external influences that may be impacting on your trading as well.
I think so. And I think he should also, just what I got from when you spoke to me earlier about his note taking, all of the data that he's recording, how focused he is. He's probably quite hard on himself, which will also impact his testosterone levels. So I would say, take it easy. Don't expect within 2 weeks to suddenly be trading every single trade perfectly. Maybe aim to, stick to your rules and come out at your targets, but also go easy on yourself and measure progression. So don't necessarily think if it's not perfect, then it's awful. If he can see that he's progressing and taking more trades, being more disciplined, and it's an upward trajectory in terms of the process, then he's on the right way to getting himself back to.
I think another thing, is that we've talked about this over the years. The amount of highly intelligent people who get into trading actually struggle with it because they are there. And he was obviously one of these high performers, very highly intelligent individuals. Sometimes that can be an Achilles heel.
Yes,
because he overthinks. And you overthink every situation so much that you create more of an issue than could otherwise be there. So someone like him would be a classic case for some kind of either, it doesn't have to be therapy, but certainly yoga or whatever it is, mindfulness that might help relax the mind a little bit, because I got the impression that he's probably got a very, very busy mind going on, and that's not going to help. Sometimes in trading, you just got to let it go. So
I was waiting for something else.
Yeah, I know. I was going to say, no, I'm not doing it. But I joke, but it's so true.
It's so
Letting it go in trading is such an important, powerful thing that you can use. Like when you have a regret after a trade, you've got to let it go. You've got to be able to move on to the next trade. It's just like professional sports people. They've got to let go of what's just happened in the last tournament or whatever. Otherwise, they're carrying that baggage with them. And how can they possibly perform to their potential if they're still carrying the baggage from the last?
Exactly.
Same with trading.
And it's a double-edged sword, because if his testosterone levels are low as a result of what's happened, you're less forward thinking. It's one of the things that happens when your testosterone levels go up is you're much more forward focused, which makes it easier to leave the previous trade or the big losing run behind. So I think great advice that you gave me, mate. I think that's great. So question, it's an interesting one that came in. We've had something similar in the past, and I already know what your answer is going to be, but I think this is worth a little bit of a discussion.
Yeah.
Is 2 strategies better than 1?
Are 2 strategies.
Or is. Yeah. Are 2 strategies. There you go. That's my grammar. Yeah. Are 2 strategies. Yeah.
Okay.
I would say it depends. So it sounds like a bit of a cop-out answer.
Yeah.
But it's too broad a question for me to say you should be trading 1 strategy, not 2, or you should be trading 2 or 3 strategies, not 1. And for me, I think it's understanding what your goal is to start with. So a lot of traders will ask that question, and that question is coming from the point of greed. So what they're actually saying is, well, I've got 1 strategy that makes me 30% a year, and I've got another strategy potentially that makes me 30% a year. If I trade both of them, I could be making 60% a year. But again, what's stimulating you to do that? Is it pure greed? There's nothing inherently wrong with wanting to make more money, but what's the price you're going to have to pay for that? Are you going to have twice as many trades? Are you going to have twice as many drawdowns? And are you actually physically going to be able to cope with that psychologically? You're going to be able to deal with the greater number of trades or the drawdowns. And the other thing I think that is important is, are you actually competent enough to trade those? Does that mean you're going to have to spend more time in front of your screens? Are you going to be chasing setups? Are they different types of setups? So there's the answer isn't the same for every single trader that's out there in terms of it. Yes, you should. No, you shouldn't. But I think as a general rule, I think traders should be careful just simply piling on more ways to trade, more strategies, more entries, whatever it is. I think it's the majority of traders want to trade more, and 80% of traders lose money. And I'm not saying therefore you should aim to trade less, but I come from the overall premise that less can often be more when it comes to trading. You shouldn't just pile on more trades.
Yeah, no, absolutely. I totally agree. It's I don't think there's much more I can add in many regards. You've just touched on it though. It does depend, but it depends on the trader, on the individual. I'm someone who I've always believed in focus, so I like to focus on a more narrow range of activity and then do that at a higher intensity. So that's how I like to do it. But then other people, when they're trading, would rather trade, for example, I like to trade just a couple of markets in essence, and I'll just trade those markets with a few strategies. So coming back to your point here, or you could have someone who has a single strategy who wants to trade it across multiple markets. So it depends on the individual and what you prefer to do. So I think the ultimate answer is that there isn't a correct answer. It does come down to the individual, because for what is right for one person isn't going to be the right answer for someone else. If someone prefers to focus and have a narrow window of activity, so to speak, and focusing on just maybe a singular thing or fewer markets, versus someone else who say, well, I'll have one strategy or two, but I'll run them over multiple markets. So again, down to the person. There's a lot of factors in play. How busy they are. Yeah. What's their personal life like? As you've just said, can you manage that amount? But how many trades do you want to be in as well? From a risk perspective. Now you can adjust your risk, so you can be really small. So you can be in 10 trades, 15 trades at a time, if they've all got really ultra small amounts of risk, and you're running it almost like a mini portfolio. But again, can you actually mentally manage that sort of thing? So you've got to. Only the person knows the answer to that one.
Yeah, I'm very big if somebody is doing that, because you see a lot. Naturally, traders get to a level of competence and they want to do more. It might be increase their risk. It might not increase their reward. They might go and increase their risk. They go from 0.5% to 1%, or they're pushing the boundary. I always say, keep an eye on your trade adherence. If you do add another strategy or you do something new, measure how well you are performing relative to the strategy. Are you able to keep on top of it? So keeping an eye on trade adherence and how well you're doing when you add more to your system or your processes.
Yeah. Okay. There we go. We're done. I think that's a wrap. His name's Ali Crooks.
His name's Charlie Burton. Try to take me out there.